Hello traders, this is Bullish Bears Jeremy again, and this is the third in the series of videos where I demonstrate how to run the swap strategy. Um, Today I'm going to show you how to run this strategy on both sides. So we're going to run it with both call and put debit spreads that are built for a net credit, or we're going to attempt to build them for a net credit. Um, let's see what we can do. So in this, price analysis is everything. And looking back, we see that this is quite bearish. We're set up for yet another pretty good sized bearish measured move here. But we got a good chance of some volatility around here because we kind of hanging sideways here. We started to get some range contraction. And then we noticed this nice, beautiful pennant here. Um, Let me show you what I did with this particular one, and it worked out to be pretty good. It was net profitable, but there are going to be a couple of dark sides to this, so I'll show you what happened here. So let me go ahead and punch this together for you. So with this wedge, we noticed it was about to break. Let me get the 1 minute chart on, and we'll show you what I mean here. That was pretty tight until it wasn't, and this is the point where things started breaking down to the bear side. So I went ahead and opened a bearish leg on this position here. Let me get to the options grid and then I'll hit the play button. So let's get that working. Again, I reset the account so I can show you some simple math on what this does. I don't tend to run continuing paper accounts. I just like to demonstrate strategies. That's what we're all about here. Okay, so long story short, we're going to go ahead and look at the options chain. This date was the 16th, so we're going to look at a couple days to expiration. Probably go to the 18th is just fine. We don't have to really put a lot of time on these. We just want the sweet spot. Around 2 to 5 days expiration is ideal for these, but I like to be on the shorter side, running 2 to 3 days to expiration. It just seems to be a little bit more lucrative for me. This will change from person to person. Everybody's got a little bit different style. So let me go ahead and hit the start button, and I'm going to grab the long put side of this. And again, I'm generally going to look for something around $100 or so. This is trading at about $1.12, but the delta is right at that 0.3 mark. Okay, I can give up a couple bucks. Why not? Let me go ahead and throw this together. Again, I'm going to get one so I can demonstrate how this works. Send it, fill it. Cool. All right, so let me look and see what happens on our chart a little later on, and I might have to back up a little bit. I might overshoot this. So let me go with, I want to say it was about 2:30 by the time this all came together. Maybe it was about 2. Whoops, too far. Let's go with 2:30. Yeah, I went too far. Okay, so let me go ahead and back up a little bit, go to the 5 minute chart. So I captured this break on that wedge just beautifully, right? But then we had a reversal and we started having some range expansion here. So let me see if I can pick about the time we noticed that this was going to reverse. This is a double bottom here. So this is the breakout bar, confirming it about, that looks like 135. Let me go ahead and back up to that time real quick. Apologies. And being that this is just for demonstration purposes, I get to show you guys kind of how to do this anyway. Okay, so we have a long put. We've captured this entire trend here. And I'm not so sure this is going to stay bearish because this reversal here is pretty keen. We've made a rather nasty downward trend. And if we look a little further left here, we can certainly see that we're definitely beyond the previous low from the previous close. But let's look even further back. Let's go with the daily chart. We're kind of at an area where we're in support from this bar, about the bottom of it. So chances are we could have a little bounce the next day or the day after. So we want to kind of set up as if we're a little unsure about what direction the rest of the week is going to bring. So let me go ahead and go back to our 1 minute chart, and then I will go ahead and start looking at the options chain as our reversal here is pretty well about to confirm here. And realistically, as soon as it starts breaking this previous high here around 441.50, that's when things are going to start swinging. Let's go ahead and get to our grid. We have our long put. It is now in the money. Let's go ahead and sell a put against that for whatever we can get for it. Doesn't really matter as long as it's more than we paid for it. We paid about $1.10, $1.12, something like that. We're looking at $1.50. It's not a whole lot, right? Just do it. Now, at the same time, we're going to go ahead and open up a long call side. So I'm going to go ahead and go over here and kind of look at my delta, be somewhere in this area. I'll go with the higher side. We'll go to 0.34. I don't mind paying a couple extra bucks for it. I like to ideally shoot for around $100, but you know, potato, potato. I might even have to work that order because it's starting to climb a little rapidly here. Oh, there it goes. Okay, cool. So then later in the day, towards the end of the day, I think it was probably around 3 o'clock. Go and get the chart up here. No, that was like 2:30. My bad. So I've got this bounce. It kind of actually bounced a little more. So if we were looking at 130 here, we could have captured it with our call here, but we're above it anyway. We can go ahead and do it now. This is demonstration anyway. I wouldn't have sat through this with that without actually clipping into a net credit debit spread on this, but potato, potato. Let's go ahead and go to our trade screen here. We paid about $1.20 for the long leg. It's now kind of at the money. This is going to be kind of a deadlock. We're not going to get much credit locked into this, really. But for most intents and purposes, as long as I didn't accidentally do 5, okay, good. Let me go ahead and knock it out for 1, and we'll sell 1 short against it. All right. Now let's go and examine this trade. So we have a series of both put and call debit spreads built relatively for a net credit. This isn't as impressive as the first 2 videos where it had slam dunks on either side, but this locks us into a position that is still potentially very profitable on either side if price breaks. Okay, and again, ideally, we want to kind of build these to the middle of the day if we can, because implied volatility is a little low, and no matter what happens, just sell it on the open the next day. Unless it's going to be where it's pretty rare you're not going to get at least something for these spreads outside of what you've locked into them. So realistically, just close them on the open and start anew. Even if you end up running the same spreads overnight, which I would not recommend, I'd rather go at least 2 days out, so maybe roll the next day. But if you wanted to run that, it technically wouldn't be a day trade if you used the same spread twice. So if you held it overnight long and then you closed it and then reopened it again, that does not count as a day trade the next day. So you can do that. Ideally, you wouldn't, because you're not going to really capture much more than what you've already got in this. So let's examine. So we have here a net credit of, let's see, what's our long leg? We got the 441 for 114. We sold the 140 or 440 below it for 153. $39. Okay, I can live with that. Looking at the other side of this, we've kind of locked into $3. We didn't get much. But let's go ahead and roll it to the next date. And like I said, we don't even have to care what the chart does, but I'm going to show you anyway. So let's go ahead and roll this to Thursday morning, and we'll run it right to 9 o'clock. Or 9:30, sorry, my bad. Go. Chart open, walk it back to a 5-minute. I'm going to zoom out. So we can see that we had our long call here, short call here. We had our long put here, short put here. We were all over the place. It was really hard to judge what this thing was going to do. Of course, it went massively lower. It had a nice accumulation and made a beautiful 1-for-1 into the close. We could have waited to sell that put, but here was a reversal where we couldn't trust which way this was going to go. And here we are opening kind of in the middle of where our call would be anyway, and about where our put would be close enough. But let's look at what we got. So now we're showing a net profit of $106, even though we didn't really get that much for locking in. But check this out. Let's go ahead and close these. So we're going to leg this together by right-clicking and dragging down, close it as a group of 2, and we're going to get 38 credit on top of the credit that we locked into this thing. Heck yeah, do it. Okay, let's go back to our screen and close the call side. Closing this, 25, in spite of it being basically right at where we opened the long leg. Send it. If you got to work the order, work the order. It's okay. We don't really care about $1 or 2. We want the big dollars. The small dollars can go pound sand. There we go. Okay. So now our net return for an overnight hold on ideally a neutral position where we basically built a condor for a net credit. And we locked in money that we couldn't lose in it. And because we just straight up closed it on the opening of the next day, we captured everything and we can be free to do whatever the heck we want. But we made $104 overnight and really didn't risk much. So pretty sweet deal. And all you need to do is have a little bit of knowledge on price action and just get the direction right. Even if it's on a day where you're not quite sure which way this pattern setup is going to break, as long as you catch at least some of the move that you can lock in a net profit in a debit spread, you can't lose with this strategy. It is realistically very it takes someone who's literally trying to lock in a loss on this to lose money on this strategy. You can do it. Don't get me wrong. It's going to be something that you might boggle a little bit. But once you get the hang of these and you start to learn that realistically you don't need to be dead on with your price action, you don't need to be like Mr. Wizard when it comes to trading, you can get this right much more often than you get it wrong, even if you're not very good at it. So that's something that is a very simple strategy, and all you need to do is unlock level 3 options trading in your Robinhood account or whatever brokerage you want to use and go for it. Ain't no thing but to do it. Just give it a try. Worst case scenario, as I explained before, if you have a situation where price is running against you on your long leg after your entry for too long and it's not looking so good, you can end up locking in a loss on this situation, but the next day you can still get something for the spread. So chances are, even if you do lock in a sizable loss like $20, $30 in a dollar-wide spread, which is significant, the next day you'll probably be able to close it for a relative amount. It's not going to be ridiculous, but it'll at least offset some of your loss that you locked in. So realistically, this is a low-risk strategy as long as you're quick to take advantage of the price action as it's happening. And trading this on a live chart, it's not gonna look as easy as I made it look. It's gonna be a little bit of a challenge to kind of figure that out. But all you really need is just to get the direction right and lock some profit in. That's all it takes. The best part of this strategy is the fact that you're opening it during a time of relatively low implied volatility, and you're closing it on a time period of relatively high implied volatility. And that is where most of that swing in value of these things is going to take place. But let's examine the filled orders and kind of show what we did here. So we knew what we locked in on the entries legging in together. We took $37 profit out of this spread, which is a little more than 1/3 the width of the spread. That's pretty good. We took $25 profit out of this spread, which is 1/4 of the spread. Still pretty darn good. You're not going to shake a stick at that very much. You're going to be pretty happy. It's a profit. It's a net profit. It's a locked profit. It did well, even though we only locked in $3 on the call side when we initially legged it together. So what? We were able to sell it the next day for $25 plus our $3. Hell yeah. It's a can't lose situation. It's even better because it opened up right about where price was when we built this thing. So it's realistically a very easy strategy. And now that you got the visual on how to do each side of it, plus you can figure out how to run it into a net neutral position, being a condor, now you've got something where you can work with this on both sides of price. You can convert it, swap it into any of these 3 categories, and run this as if you're just following the price. And that's what you're essentially doing anyway as a trader. You're buying low, selling high, rinsing and repeating. And if you get the direction of price right on the underlying with options, it becomes net profitable day after day after day. It's incredible how fast this will add up in your account. Anyway, thanks for joining me. Have a wonderful afternoon, and I hope to see you guys on the next one.